SoFi had one of the more interesting reactions in the market on Monday, falling over 10% after announcing what I think was a really solid quarter across the board, beat its own guidance, beat analyst estimates. But guidance was a little bit weak for the second quarter, and investors are just generally concerned about the company growing in the right areas and actually turning their growth into profitability. Now, oftentimes what SoFi does is they underpromise and overdeliver. So I want to say that up front because I always think you need to take their own guidance and some of the comments that they make with a little bit of a grain of salt. Management generally has a pretty conservative look on the economy and on interest rates. Those things have served the company extremely well in 2024 and really over the past year. They were not a company that was betting on multiple rate cuts this year. In fact, talked earlier this year about how that probably wasn't going to happen. And even if it did happen, it would probably be bad for the economy or mean that the economy was really weak. So despite the fact that I think management is doing the right things and acting very logically, the stock is down. And it's a little bit understandable why, but I do want to highlight where the company's growing and why their growth avenues could be phenomenal for long-term investors who are really thinking about where SoFi is going to be 5 or 10 years from now and not necessarily where it's going to be a week from now. So that's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to the market's reaction first. This is SoFi's stock performance so far today as I'm recording, down 10.2% on the day. And really shares dropped from the start. But let's get to some of the bigger numbers for the quarter, because I think fundamentally what you want to look at is SoFi heading in the right direction? And if it is, then it's a stock to just hold, maybe even accumulate long term while the market tries to figure out what they want to value the company at. You can see that member growth was 622,000 in the quarter, 44% from a year ago. So still just a phenomenal growth company. The number of products that the company has outstanding, 38% increase. This is always kind of a strange count, but it is sort of a proxy on how many products are actually going through the system. Galileo accounts were up 20% from a year ago. So you want to see this continue to rise, but it hasn't been quite the same growth product that it was in 2021 and 2022. And then this is their lending and financial services. I'll get to some of the numbers on the lending side, but they've kind of cut back and been a little bit more conservative on the lending side. And that was one of the pieces of disappointment for the market. But financial services and technology revenue, that's really where the company's going to be able to scale a little bit better and potentially be even more profitable than it is in the lending business without taking the same financial risk. And that was up 42% from a year ago. Here's a look at revenue and quarterly adjusted EBITDA. You can see the revenue was down a little bit from a quarter ago. This gets a little bit to the timing in some of the revenue or some of the lending products that we see. 26% growth from a year ago though, and adjusted EBITDA up 25% from a year ago at $144 million. That compares to this guidance. This was their guidance in the gray column in the middle for the first quarter of 2024. So they exceeded guidance from a revenue perspective on adjusted EBITDA margin, and on GAAP net income. But after that solid result, management didn't want to overpromise like they never do. So they're actually saying that they expect revenue to be down a little bit in the second quarter to $555 to $565 million. And then adjusted EBITDA to fall to $115 to $125 million, with net income at only about $5 to $10 million. This is exactly what the market latched onto, is that management is guiding for a relatively weak second quarter when you look at the first quarter numbers. But like I said, management does like to underpromise and overdeliver. And so I think listening to the conference call and the way they talked about the business, I think they're just being very conservative in the way that they're expecting results to play out this year. They talked a lot about uncertainty in the economy, got some pushback on that, saying, there's a lot of banks that are thinking that the economy is going to be great. And they were just kind of saying that they didn't necessarily think that was the case. So SoFi does have a lot of information on what the trends are for personal lending. So they probably have great insights into that. Did say that defaults were up early in the lending cycle, although they don't expect overall defaults to really change all that much. But that could be an indication that people are getting a little bit more overextended than they were even a year ago. here's what I think we need to think about for 2024. Because if you are invested in SoFi, and this is a stock that I bought recently, you need to think about where you want this company to grow. Do you want to be growing their lending business, which includes home loans, student loans, and personal loans? Or do you want them to grow financial service products like stock investing, debit cards, credit cards, or the tech platform? And I think that the latter two, the financial services product and the tech products, is really where you want to see the growth for a company like SoFi. So you look at the full year guidance, and they said that they expect financial services revenue to be up 75% from a year ago. Now, this is still a business that's losing money for SoFi. So if they're going to grow it at 75%, that's just phenomenal growth. And then the tech platform is expected to grow at 20%. But revenue is maybe not going to do quite as well because the lending revenue is expected to be down a little bit from 2023 levels. This is in part because the company is being very conservative with their operations. So you want to see that from a bank long term, but it's not necessarily something that the market is pleased with short term. Adjusted EBITDA expected to be $590 to $600 million, and then a GAAP diluted earnings per share of 8 to 9 cents. On the high end, that would be price to earnings multiple of 78. So still a pretty expensive stock from that standpoint. And that's really what the market is looking at today. I did want to highlight some of the trends, and these tables are really small. So I'll just read out some of these numbers and try to show the trends that we're looking at for SoFi. So like I said, these are the three main lending segments: student loan, personal loan, and home loans. And what you see over time is that at least over the last couple of years, they've really increased their home loan business. Now, $336 million in volume. Has done more than that in the past, way back in 2021, but that's really pulled back over the last couple of years. Student loan business, $752 million worth of lending there, but that's been over $1 billion if we go back to 2021. So do you want to be lending money to student loans, or do you want to be lending it to home loans? I think it's much safer to be lending it to home loans. Same thing for personal loans. This has been pretty volatile, and this has been a great business for SoFi. But that's now $3.3 billion about, which is kind of flat over the past year. So they're growing in different areas than they used to be. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is one of those challenges with SoFi as a company, is it has a lending arm and it has a technology arm. And so investors are trying to figure out, do you value this like a traditional bank where you want to look at their book value and what their loan loss ratio is and all that kind of financial stuff? Or do you want to value it like a tech company where you're going to have very high margins? Yes, you're maybe losing money today, but you're going to more than make up for that in the future when you start to reach scale with Galileo products, with financial services, with the tech platform. And SoFi is kind of stuck in the middle. It's trading more like a bank stock today. The book value for the company is $5.8 billion as I'm recording, and the market cap is only $8.3 billion. So that's not a huge premium for a company that has a pretty big tech business. But this is kind of the way it goes with a company like SoFi. And so it's sort of understandable that the stock is down given the relatively weak guidance and investors trying to figure out if management is being aggressive enough in the way that they're lending out products. But I think what I keep coming back to with SoFi is that this is a company that is much better positioned for the future of finance, which is digital, than a lot of the traditional banks. One of the things that brought me to SoFi was seeing more bank branches being built around where I live. If you're building bank branches and building physical infrastructure, that's money that's not being put into building out tech platforms. You're going to have to offload that to a company like SoFi. And I like the scalability of SoFi's business. And if you look at the long-term charts, they've just had phenomenal growth on financial services, on the tech platform. And that's exactly what I want to see from a fintech stock like SoFi right now. So I like where the business is headed. Yes, the results are going to be lumpy, going to be very volatile quarter to quarter, but management, I think, is being very conservative in the way that they're lending out money, and they're growing in the right places. And if that growth is going to be 20% plus. I mean, financial services growth is 75% this year. That is a phenomenal growth rate, and that's a kind of investment that I want to be in, looking for asymmetric potential. That's my takeaway from the results, but what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.